The market is not particularly overregulated, except for foreigners because they have foreign ownership limits, right? 49% for commercial and industrial companies, 30% for banks. But otherwise, there's lots to do in the market. It's not that heavily regulated. There are lots of good companies that foreigners can buy apart from these stocks, which have now hit their foreign ownership limits. They're great stocks. They're excellent companies, but they are only 9% or so of the market. And, there's lots of great big caps you can look into, which are not yet at their foreign ownership limits. So I wouldn't say that it's heavily overregulated. And when you consider the ratings which Vietnam is on versus peers in Southeast Asia, it's a very attractive market for the long term.
Okay, and so thanks for sharing that with us. So give us a sense then of what can you buy in Vietnam at this point in time as the economy comes back from the COVID-19 crisis. What are the sectors, what are the stocks that you see value in?
Well, remember that Vietnam's stock market is all about the domestic economy, right? So the great Vietnamese export machine is either owned by multinational corporations, which aren't listed here, or it's mom and pop domestic workshop operations, which are too small to ever get listed, right? So we just play the domestic economy as driven by formation of a middle class, and the sectors for that are financial services and consumption and urbanization. So we just identify the companies that seem to benefit from those forces, and that's how we do portfolio construction. For example, in banks, we like Asia Commercial Bank, Vietcom Bank. In real estate, we like Vinhomes. In consumer, we like Moby World Group. And there are names I can cite that give you the best plays on those three themes that we use for doing the domestic economy.